In this video, we are going to visit opposite land. Like when you say to a toddler, yes, and the toddler says, no. Or like your parents, you want them to be normal, but they want to sell the house and live in a van down by the river. That is the nature of contra accounts, and that's what we're exploring today. Welcome to Accounting How To. I'm your host, Carolyn Grimm, and that's my contrary sidekick, Terrence, and we are here to put the fun in accounting fundamentals. So when we talk about contra accounts in accounting, what we're talking about are accounts that are going to be paired with another account to offset the balance in that other account. Contra accounts work the opposite of the account that they're paired with. Stick with me on this. So a contra account is used to reduce the value of a related account when the two are netted together. So the purpose of doing a contra account rather than going right directly to the main account is we want to preserve the historical information that's in the main account, but we also want to represent the true value of the account by showing that the main account is not necessarily worth what we say that it is on our balance sheet. Let's look at a couple of examples. Now, if you've watched the Allowance for Doubtful Accounts Bad Debts video, you've already seen this in action. If you've watched the depreciation videos, you've already seen this in action. So when we're looking at our balance sheet, we'll have something like accounts receivable as our main account, and then we have Allowance for Doubtful Accounts as a contra account. When we net those two together, it gives us the true value of our accounts receivable account. When we have a fixed asset on our balance sheet and we have accumulated depreciation as a contra account, then when we net those two together, it gives us our net book value for that asset. So those are contra accounts in action. But let's talk about what those contra accounts are. So we have 5 major types of accounts in accounting. We have assets, liabilities, equity or capital, revenue, and expenses. Well, we can have contra accounts for any of those. So we can have a contra asset like allowance for bad debts. We can have a contra liability. We can have a contra equity account like withdrawals. We saw that in the first few chapters of our Accounting 1 journey. We can have a contra revenue account like sales discounts, and we can have a contra expense account. Now, you don't see contra expense accounts very often, but you can certainly have them under certain circumstances. So let's talk about some account pairings. So fixed assets, accumulated depreciation, notes payable, discount on notes payable, bonds payable, discount on bonds payable. Joe Smith Capital or Joe Smith Equity can have Joe Smith Dividends or Joe Smith Draw. Capital stock, treasury stock. Revenue, sales discounts. Revenue, sales allowances. Revenue, sales returns. And under the expense side of things, what if you are getting reimbursements? So for example, if you have advertising expense, but you're going to get reimbursed by a third party for part of what you spend on advertising, then you could have an advertising expense contra account to keep track of that so that we know whether we've gotten paid for everything that we're owed. So when we use a contra account, it is going to behave the opposite of the account that it's paired with. So if it's an asset has a normal debit balance, so a contra asset would have a normal credit balance. If we're talking about a contra liability, a liability has a normal credit balance, so a contra liability would have a normal debit balance. Equity accounts, normal credit. Contra equity, normal debit. Revenue, normal credit. Contra revenue, normal debit. And expense, normal debit. Contra expense, normal credit. And once we've posted to those contra accounts, when we get to the financial statements, you will see the main account and then the contra account that it's paired with, and then the net value of that main account. So that's why we use contra accounts. We want to preserve the original data in the main account, but we also want to recognize that that may not be the overall true value of that account. And there you have it. Contra Accounts Explained. Until next time, stay balanced, my friends.